The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, tough day in commodities on Thursday. Plenty of sell pressure seen across grains and oilseeds, the soy complex in particular. Wheat futures down moderately. Corn held up well in the face of all the pressure in the soy complex, for instance. We also saw a down day in cattle futures and in hogs. Cash cattle trade has stayed relatively steady, though. Sell-off in energies, a little bit lower in stocks. Just it felt like a risk-off kind of trade day across the board Thursday. Plenty for us to unpack. Let's take a look at some of the selling and what's maybe at play here, especially on the grains. Joining us for a conversation, Dave Brock with the Brock Report, and it's good to have you back with us here on Market Talk. Dave, how are you?
Doing good. Thanks for having me back. How are you?
I'm great. Better than markets were on Thursday, man. I got to say, you look at the pressure, particularly in the soy complex, and I guess just initially your thoughts here. I'm hearing a lot of farmers selling. I'm hearing some fun movement maybe in these markets. We obviously had the USDA shocker last Friday that gave us a lot of momentum. Does this just feel like a price correction across the board on Thursday?
Yeah, it's kind of hard to say. I mean, the old joke with the studying charts is if you draw a line at today, it's the left side's real easy, the right side's real hard. We're in the camp right now that it's a correction. It's hard to be too convicted of that when you consider the global stocks to use, which we talked about last time. I think everybody's pretty well aware. We got, record world ending stocks, near record ending stocks to use. And does that jive with 1050 soybeans? I don't know. The other question I think people are asking is, the price rally we had the last couple of days. All right. Yeah. 90 million bushels came off the U.S. soybean ending stocks. Was that traders reacting to that and then coming back to reality, looking at the global situation? So I do think there's risk for the market lower. If you look at our U.S. balance sheet, USDA ending stock or average farm price estimate, we're pretty fairly priced on the board here. And the technical picture is that soybeans have put in a long-term bottom. So I don't know if that's hope or belief, but that's where we're standing right now.
Well, looking at this, and you mentioned this to me before we went on the air, and I think we should kind of lean in here a little bit. Just some of the big differences in the corn market versus the soybean complex right now. Let's start on the corn side because, again, in the face of all the sell pressure, I mean, corn futures down, 4 to 5 for the most part on the day Thursday. Not a terrible day considering everything else we saw. So what are you watching in this corn market right now?
Yeah, if we could do a screen share, I can show you 4 charts that kind of articulate the primary differences that I'm watching. And as you mentioned, the price action here, corn is still hanging in above crop report price levels, and beans are kind of back towards the low end of the prices they traded that day. So let me just pop this up here if I can do this. Here. So the first one in corn, I tweeted this out, and I think it's important, and not a lot of people had been talking about it, at least people I'm listening to. So the first thing I want to look at is our stocks to use ratio. So this is the number people typically talk about, our world stocks and world stocks to use. But what I did is I took out China. So if we ignore China, right, because those stocks pretty much stay there, we have the tightest stocks to use ratio, excluding China, that we've had since 1995 and 96, all the way back here. So the global stock situation is relatively tight. And so that's one of the main issues. Now, if you flip over to soybeans and you look at our world ending stocks to use, like we said, it's significant. And you've made a couple comments about traders. I want to point out the main difference in the corn and bean markets and what large speculators are thinking about it. So right here, we've got large specs. Red lines are the number of their short positions, and greens are number of their long positions. And so when the green bars are getting taller, that's new buying. When the red bars are getting smaller, that is short liquidation. Okay, so it's great to see both. We really want to see new buying coming into this market. So when everybody talks about how the large spec position has been long, not only are they getting out of their shorts, but they see something that they like enough to say, hey, I want to get long this market. If you flip over to the soybean version of that, and they've been buying as well, but as you can see here, it is almost entirely through short liquidation. Okay. Spec traders are not saying, hey, there's long-term upside in this market. So when you pair the global fundamentals and what the large specs are doing here, I think that kind of articulates really the key differences between the two markets right now.
And that's I'm glad you brought that up and looking at that fund position and the specs here, just because it seems like that there's so many different factors at play here. And I guess to me, I felt like the soy rally early this week was kind of hollow. It feels like corn has just been grinding and grinding and grinding, and then you have soy shoot higher on some of those USDA moves, and it just, I was waiting for the other shoe to drop, I guess, so to speak, here this week, Dave.
Yeah, it does kind of feel hollow, and it's hard to say why. I mean, I think in the corn we can really point to some specifics that are really tangible, right? Like the stocks we just talked about. I mean, the other thing is, if you look back at the September WASD versus the January WASD, we've taken over 500 million bushels out of the ending stocks. Okay, I mean, that's remarkable. That's a lot of production and increased usage. The soybean balance sheet's gotten a little bit tighter, but A, not to that extreme level, and B, the U.S. is not as dominant a player in soybeans as it is in corn. The other thing I want to point out on these price rallies, open interest and volume has been going up in corn, and it's been going down in soybeans. So when you see that increasing open interest kind of gives the move additional confidence, right? And if you see it going down, it's more people moving to the sidelines than piling in on the new direction.
Weekly export sales came out Thursday too. Let's talk about that. I know the soybean numbers were pretty rough. Corn and wheat were okay from what I saw of those numbers. What stood out to you when we looked at weekly export sales?
Yeah, not great. I mean, I've been kind of trying to figure out, as everybody's trying to figure out, is have the export programs been doing well because people are front loading the Trump administration, potential tariffs? We won't know that for several months. But I mean, you can see, these weekly net export sales were really strong, and they've gotten pretty weak. So corn rebounded nicely. Wheat was okay. I mean, soybeans were kind of meh this week. So it's slowing down seasonally. It's going to do that. But I mean, our pace this year versus last year in both corn and beans has been really good. So take it while you can get it. I hope it keeps coming. Hard to say. Another thing I want to point out on the corn, and I haven't fully fleshed this out yet, but one of our main corn export competitors, Brazil. I mean, if you look at their balance sheet right now, I mean, they've got their tightest projected ending stocks since, goes back to 1982-83. I don't know about you. I wasn't doing a whole lot back then. We're talking a long time ago. So their stocks to use is down around 2.1%. They average around 10 to 12% ending stocks to use. So they're projected to have 2.1 million metric tons at the end of the marketing year. And that's with 127 million metric tons of production. Okay, so any production issues there, I mean, they really don't have excess corn to export. And to put that in terms we understand, 2 million metric tons of corn is about 80 million bushels. Okay, that's not a lot of leftover corn. So I think there's a higher potential for us to continue to have strong corn export demand. It's a little more risky on the bean side.
How about just the wheat markets in general? You mentioned weekly export sales were okay there. Obviously, wheat's had a lot of headwinds with a high U.S. dollar that's still up here at lofty levels, et cetera, et cetera. Price action for months in wheat has not been great. Is there anything chart-wise there that you're paying attention to on the wheat trade?
Yeah, I think I'm just sharing this tab, not my screen, so I can't pull up the price chart. But we did this week break some significant trend line resistance. Okay, so that's good. The other thing that I think is good is if you look at our ending stocks to use ex China, I mean, it's contracting a lot. It's been contracting for years. So our stocks to use situation for wheat is I think supportive prices where they're at right now. So I'm optimistic on wheat prices, particularly if corn can go on a little tear here. So yeah, I don't think right now is the time to be selling wheat. Although they joke, sell wheat, live in a mansion.
Yeah.
So we'll see.
Well, I wonder too, just from a general risk management standpoint here in the grains and oil seeds, considering what we saw earlier in the week and maybe getting a price correction into a 3-day weekend, I'd have to think at this point, a lot of folks, and kind of back to the farmer selling point, they've started to really take a hard look at some of their risk management here and trying to make some decisions here with a decent rally, right, Dave?
Yeah, and it's a tough question to answer. I mean, it's obviously very individual to each farm, right? Some people are completely sold out of old crop. Some people have it all in a bin. So it's different for everybody. I mean, I think marketing strategies that work this year are going to be different from what worked in the past couple of years. I mean, we're coming off a couple year bear market. I think the general tendency, I know my personal tendency is to want to sell too early in bull markets. Can you call this a bull market? We can decide that in about 6-8 months, right? So I think, incrementally taking risk off the table makes sense. Making small cash sales makes sense. Soybean is so volatile that, I often talk about even just making 5% sales, right? That removes a lot of, A, the emotion out of it, and B, if you're making 10, 20% sales, that's a big decision, right? It's burdensome. It's easy to get kind of clammed up and not do anything. If you tell yourself you're going to make 25% sales, it's a lot easier to say, all right, I'll sell 5% here. You're not worried about it continuing to go higher the same way you are if you make a 20, 30% sale. So I think that's one way to look at it. And, for people who do use futures and options, there's some really good cheap options out there for corn right now in particular, right? The February is off the March. If you're worried about this long weekend, you can get coverage through next Friday for, 2, 3, 4, 5 cents. Pretty reasonable thing to consider for people who do use that. So that's kind of the way I'm approaching things right now.
Dave Brock with the Brock Report joins us here today on Market Talk. I should ask, and some of the outside and other markets here too, cotton, rice action, et cetera. You look at the outside trade, been a lot of moves this week in energies and the dollar, et cetera. So I'll kind of open that to you. What one of those markets you want to take, but anything big you're watching out of some of those other markets this week?
Real quick on rice, I want to point out the large speculator short position by itself accounts for about 48% of total open interest, right? So that's something could be explosive for prices to the upside. It's not really a time of the year to be making big marketing decisions in rice or cotton. We'll say the cotton chart looks pretty terrible. Hopefully that turns around. You got to wonder, and there's, again, no way to know here, how much of this is due to outside economic factors, how much of it is due to concern about Trump taking office, what he's going to do the first few weeks, is it risk off? It seemed like today was kind of a sell everything day. And so we're just going to have to kind of see how things develop, after day one and week one and month one. We should start to see some more stability come back into the market. We'll be getting into the spring months, have a clearer picture of kind of the global situation aside from what politics are doing to our commodities.
Absolutely. I should add in here as well, livestock wise, would you say that sell everything kind of mentality spilled over into cattle and hogs as well on Thursday? I know this cattle market, Dave, I think everyone's kind of wondering when the bull run ends in cattle, and it hasn't stopped for the most part yet. So wondering if it was just a case of, risk off type of trade in cattle on Thursday as well.
Yeah. It's a tough one, right? You want to sell cattle. Anytime you've done that in the last nearly 5 years, you've regretted it.
Mm-hmm.
We're coming on literally come April, it'll be 5-year bull market run, which is just remarkable. There are signs that it's turning. If you want to look at, and I don't really focus this much on COTs, to be honest, but the commodities we're talking about, they're in such extreme positions right now. Specs have been buying live cattle, feeder cattle like crazy and still are. For hogs, they've recently turned over. It's in a very, very bearish situation for hogs. You can see they've started major long liquidation. No new selling yet, though. Okay, so and I know the fundamentals are pretty supportive for hogs right now as well. So I think it's a little too early to say the hog market has peaked, but there's certainly reason for caution. For the cattle markets, until the funds stop, aggressively chasing this, and they're approaching their all-time historic long positions. There's probably still some room there. So that's kind of my view of the livestock market.
All right, Dave, good stuff as always. Appreciate the chart perspective and more. Final thoughts you'd have for folks here today as we wrap it up? Anything you want to mention or reiterate as we close out the week ahead of a 3-day holiday weekend?
I think the main thing is, corn is I think turned a major corner. Sometimes it's hard to recognize what stage of a market we're in right now. The bear market, I think, is officially over in corn. You take 500 million bushels off the balance sheet in a few months. That's extremely good. So beans, it's a little different story. I think beans, it might be more of a short-term pop. We still have, broader bearish fundamentals going on there. But when you see price action like this, my main perspective is pretend you have no idea what's going to happen in the future. Take advantage of these rallies. Don't get too bulled up. Don't start thinking about $5-6 corn. Just continually take risk off the table. Move your marketing plan forward, and hope the sale you make today is the worst sale of the year.
Good thoughts. And I know if folks want to reach out, you guys have a lot of resources available. BrockReport.com. I'm sure that's a great place to start, isn't it, Dave?
That's a great place.
BrockReport.com for more information. Dave Brock, thanks for joining us here on Market Talk today. Have a great weekend, sir. We'll talk to you again soon.
Thanks, Jesse. Take care.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.